Well, good morning and good afternoon, and welcome to the November 2023 WASDE review webinar. My name is Andy Miller with DTN. I'll be your moderator today. And with me, as always, is Todd Hultman, lead market analyst for DTN. Before we jump into Todd's presentation, just want to remind everyone that all participants will be in a listen-only mode for this webinar. But please do ask questions. You'll see a question bar in the bottom right of the screen. As you enter your questions, we'll save those till the end of the presentation, and Todd will address them at that point. Other than that, just to let everyone know, this is being recorded, and we will have a rebroadcast link up on dtn.com within the next 2 business days. And with that, I think we're ready to go, and I'll turn it over to Todd.
Thank you, Andy. Thank you, everybody, for joining us here of our November WASDE webinar review. This is typically the time of year when USDA is really dialing in on the corn and soybean production estimates. Obviously, we're well along into harvest now, so the survey data that USDA received in late October and early November is going to be considered more accurate than usual, and history has borne that out to be the case. So let's go ahead and get started here. And here's the track record of the crop production estimates of the WASDE reports. And I just want to point out once again how good the November report typically has been over the past 40 years. The margin of error on the November estimate, plus or minus 2%, plus or minus 4% for soybeans. So this is really considered a report with a good reputation, and considering also that we really haven't had any significant weather problems through harvest or any big interruptions to make us doubt the information gathering process. I do consider this report to be a fairly good numbers. That doesn't mean there won't be adjustments in the January report or even later a year from now. But I think it's fair to say that we're getting fairly close on having an idea of just how big this year's crops have been. And to me, it was a surprise today, I have to admit. So let's take a look at the corn numbers. And right away, we're going to see that USDA estimated a new record corn crop this year, 15.234 billion bushels. Something I certainly didn't expect. I think a lot of us expected a possibility of a higher yield estimate, but I didn't expect it to go from 173 up to 174.9 bushels an acre in this report. So that's a bit of a bearish surprise for corn. We had been hearing reports from all around the country, I would say, except for Nebraska, that producers were surprisingly pleased with the yields that they were getting at harvest time, and considering the lack of rain that so many of them had, it seemed quite astonishing to hear about the production that they were getting. So that ends up being reflected in today's report from USDA. Once again, this is a record corn crop. The last time we had a crop this big was 2016. The old record was 15.15 billion bushels. Now this is up to 15.23. And of course, the big difference that pushed it over the top was we planted a lot more corn this year than normal, 94.9 million acres, and that still stands up as the estimate today. Now with the bigger corn crop, we're also going to get some demand adjustments, which is natural when you see a bigger crop. So USDA increased the feed demand estimate. That's the third arrow on this graphic, by 50 million bushels up to 5.65 billion bushels. The next arrow down, we see that USDA increased the ethanol estimate by 25 million bushels to 5.325 billion bushels. We'll have a graphic on ethanol later, but basically the incentives have been very good for ethanol production as corn prices have come down this year. And then the third adjustment for demand, the last arrow on the bottom, we see a 50 million bushel increase in the export estimate for corn, now up to 2.075 billion bushels. And I think it's fair to say that over the past 2 months, this has been a nice bullish surprise for corn to see the amount of export interest coming in here, especially coming off of such a poor export year last year, and we'll mention that in just a bit too. At the end of the day, the new ending stocks estimate for corn in the new season, 2.156 billion bushels. This is, I believe, the highest in 7 years that we're looking at now. So USDA giving corn an average farm price estimate, $4.85. That's down a dime from last month's estimate. So a bit of a bullish or a bearish surprise here for corn. On the yield state by state breakdown of yields, we saw slight increases in most states except Kansas and Nebraska had slight reductions, having a harsher time at the end of the season. So just as you can see on this map here of the state yields, the 3 I states in Ohio had a very strong performance this year. And frankly, I think of those 4 states, probably Iowa surprises me the most because I know that even today they still have a big patch of extreme drought conditions sitting over the eastern part of that state. But for Iowa to come up with a 200 bushel average on their yield this year seems quite astonishing given the weather situation that we had. And of course, everybody's going to credit the new seed technology, and seeds seem to be getting better all the time. The king of the hill, of course, Illinois at 203, which also was a very good year for Illinois. Not as good as last year's 214, but still, again, considering the very limited rainfall amounts that we had this year, it's just interesting to see how it plays out. Once again, overall, the Eastern Corn Belt did much better than the Western Corn Belt, which suffered on the drier end of the scale. Not a surprise there at this point. Okay, let's go now to the world estimates for corn. In the upper right-hand corner, we can see USDA's new ending stocks estimate for corn came in higher than expected. 314, almost 315 million metric tons. That's up from 312.4 last month. We also saw an increase in the world ending stocks estimate, which excludes China. That went from 110.6 to almost 113 million metric tons. So of course, the bulk of the increase came from the United States, which is the top rectangle in the second column. Looking down from there, we see no adjustments yet to the corn estimates for South America. Argentina staying at 55, Brazil staying at 129 for now. We did see a bump up in Russia's corn production estimate from 14.6 up to 16 million metric tons, and we saw a 1.5 million metric ton increase for Ukraine. Along with that, if we look to the right, we also see that Ukraine's export estimate for corn was increased 500,000 metric tons. Now, Ukraine still has a lot of difficulty exporting corn. They're still being attacked at their ports weekly, if not daily. And so they're still having a difficult time. And overall, it seems as if their corn exports are taking the hardest, having the hardest time in continuing to move. Corn exports so far to date have been down roughly half compared to a year ago. Now, last year's export estimate was 27 million metric tons. USDA is counting on them to get to 20 million metric tons this year, but that remains to be seen. That may be tough to do for Ukraine's corn estimate this year. The other thing I want to mention that's not on this particular chart is that Canada's imports of corn from the US increased. Last month it was 2.2 million metric tons. This month it's 3.2 million metric tons. So a slight increase there in the import needs from Canada. And also not pictured on here is China, and China's demand estimates were unchanged, and China's crop estimate stayed unchanged at 277 million metric tons. Going to the next page, here is the perspective of what the world corn supply situation looks like. And again, we exclude China, which I think is a more accurate portrayal of what we see here. In this report, USDA is estimating 4.45 billion bushels of global ending corn stocks at the end of the 23-24 season, excluding China. That's the most in 6 years now. So they're expecting quite a rebound in world corn supplies this year. Now, keep in mind, a lot of this is going to depend on good big crops from South America. And right now, South America is having early weather problems. We've got a dry situation in central Brazil with hot temperatures. Also in the northeastern Brazil, the forecast is dry the next 10 days. We also have heavy rains in southern Brazil, especially Rio Grande do Sul, and with more rain in the forecast ahead for that southern Brazil region. So there's going to be more to come, is all I'm saying. It's very early in the new crop season for South America, but certainly we're seeing early threats to their crops already. The corn basis here in the US basically has fallen back to just a very normal level for this time of year. DTN's National Corn Index last night closed at $4.51. That's 25 cents below the December's futures. And if you can tell by all the gray lines here, those are where the basis has been the past 10 years. So corn is basically at what I would call an average price for basis at this time. Not as strong as it was a year ago. Definitely that 2022 basis was very firm throughout the fall season, but we're not that strong. But basically, what I would say is a normal basis for this time of year. And of course, having a new 15 billion bushel plus crop is helping keep the basis lower than it was a year ago. The export situation, I don't have a graphic just yet. We're still fairly early in the season, but I did want to point out because there are some interesting trends already when you look at the export sales and shipments of the three big crops. Corn as of, and this is as of this morning's weekly report, corn sales and shipments up to 759 million bushels. That's up 31% from a year ago. So if you recall, we had a hard time moving corn early in selling corn early last year. We had a lot of tough competition from Brazil, and Brazil still is lined up to be the top exporter of corn here in the new season, but it doesn't look like they're going to dominate as strong as they did last year. So it is encouraging to see our corn export sales and shipments up 31% from a year ago at this point. Soybeans, on the other hand, at 891 million bushels, is down 26% from a year ago. But you have to keep in mind it's a little bit of an apples and oranges comparison because last year Brazil was coming off of a drought-limited crop. This year, we're coming off of a record harvest from Brazil earlier this year. So Brazil's had a lot of soybean exports this year. And of course, they're going to be the king of the soybean export market this season, as they have been for several years now. But our soybean export sales are starting down 26% from a year ago. We've seen quite a bit of activity. It started picking up actually in late July, but has really picked up recently, corresponding to the weather concerns that we're seeing in central and northeastern Brazil. So again, this is a fluid picture that will change as we move ahead. And then lastly, wheat. Unfortunately, wheat exports, sales and shipments, 431 million bushels, down 6% from a year ago. Last year was an extremely low pace. This year, USDA is estimating wheat exports to be down 8% from a year ago. So we're a little better than expectations, but really these are the worst export business that wheat has seen in over 50 years. So very, very tough demand situation for wheat right now. Here's the ethanol picture I wanted to show you. The blue line is corn's estimated processing value, and this is taken for the state of Iowa as one example. And this comes from a weekly USDA report, which just came out Monday. Corn's estimated processing value, if we consider the value of the ethanol and the distiller grains and the corn oil, we come to $7.40 that you can gain from processing corn from a bushel of corn. At the same time, we have DTN's National Corn Index trading down around $4.43. So obviously there's a very healthy margin here. Now the price of ethanol has dropped sharply in the month of October, and we see that reflected a little bit in the processing value, the blue line. But in spite of that drop, we still have very healthy margins at the ethanol plants, and for that reason, we continue to see strong demand for corn to produce ethanol, and that's one reason we saw that increase in USDA's estimate today for ethanol production coming up 25 million bushels from last month. The December corn price, well, we can see that big spike last summer. We had a very volatile summer, but since summer, the corn prices have basically stuck near their lows of the year. We had one little rally attempt in October that failed quickly, and here today we're back challenging the lows of the year. 467.75 is the September low to somewhat keep our eye on. Let me just take a quick look here and see. We're currently trading right on the low, 467.75. So we'll see how things handle it. But obviously, having a record crop estimated today is not helping the corn price. On the other hand, as I noted, we do have some good demand for corn this year at the cheaper price levels, and we have those threatening weather conditions in Brazil. So it'll be interesting to see. I'm still hoping and expecting to see some type of post-harvest rally where hopefully we can get a little better marketing price by the time we get to January, or at least before we get to Brazil's next safrinha corn crop in July. So hopefully we'll have some little marketing opportunity there. Now take a look at the new USDA estimates for soybeans going into the report. Based on the things I had been hearing around the country, I thought there was a good chance we might get a small drop in the soybean yield, but that is not what happened. The soybean yield was actually increased from 49.6 up to 49.9 bushels an acre in this November report. And that brings the crop estimate up from 4.1 billion bushels up to 4.129 billion bushels. So I believe that's still the smallest crop we've seen in 4 years. That part of it hasn't changed. It's still a tight supply situation, but the ending stocks estimate did increase in this report. Instead of 220 million bushels, it's now 245 million bushels. The same average farm price estimate of $12.90 says USDA, but the 25 million bushel increase came directly from the increase in the crop estimate. So that was basically the change for the day. USDA kept both the crush and the export demand estimates unchanged at their current levels. The breakdown of state soybean yield estimates really were fairly close to what we saw in the latest report. There were some marginal improvements, but not big changes overall. Much like corn, we see the best yields coming from the 3 I-states and Ohio, while the other states had lesser results. Probably the irrigation in Nebraska helped bring their average up to 51 bushels an acre, because they certainly didn't have a lot of rain this year. And you can see that in the Kansas number as well. They got hit pretty hard on their soybean yields. So it is what it is, as they say. And a tough year overall in terms of moisture, but we did come through with a 49.9 bushel an acre average yield, says USDA. On the world numbers for soybeans, the world soybean stocks estimate fell slightly from 115.6 million metric tons down to 114.5. That's the rectangle on the upper right corner that you see there. I need to explain there was a note in the USDA report today where they said that they went back to previous years and made some revisions in the world numbers for soybeans. And what happened was they basically revised Brazil's soybean supplies up 2 million metric tons, and they revised China's soybean supplies down 3 million metric tons. So it was almost a wash overall. If you look at the upper left-hand corner, you see that the beginning supplies for the current season were adjusted down roughly 1.5 million metric tons in today's report, and that pretty much accounted for the 1.1 million metric ton drop in the ending stocks estimate. Now, of course, U.S. production was increased a little, as we saw on the U.S. balance sheet. And if you look at the long rectangle in the third column, you see that the South American estimates did not change in this report for the new season. So we still have Argentina at 48. And Argentina, by the way, is experiencing much better weather this year. They're getting good broad rain coverage just in the past few weeks, especially, have really seen an improvement in conditions, and they have better rain activity in the forecast now. So it does look like Argentina is going to have a much better corn and soybean crop situation this year than they did a year ago. It's Brazil where the concerns are with dry and hot temperatures in central Brazil and northeastern Brazil. And by the way, CONAB came out this morning, Brazil's crop agency, and they actually increased their estimate of Brazil's crop up to 162.4. So they're closer to USDA's number now. But they did note that considerable replanting is probably going to have to take place to get past the dry planting conditions that they had the past couple of months here. The other thing I wanted to note is in the old crop season, Brazil's production estimate was increased by 2 million metric tons up to 158 million metric tons. So that was also among the revisions that we saw in today's report. So that's once again a record crop that we saw earlier this year. This balance sheet that we're looking at is for the new season, which is the crop that's just almost roughly half planted at the moment in Brazil, and won't be harvested until late January or February of 2024. So USDA held back from making any crop estimate changes for that season at this time. As far as the U.S. soybean basis goes, we now have a new month. We're keying off the January month instead of the November. And much like corn, the red arrow indicates where we're at right now. So the soybean index from DTN closed at $13.03 last night. That was 63 cents below the January contract. And again, that's kind of right in the middle of where we normally are this time of year. Based on the gray lines, which look at the past 10 years. And again, it's not as good or enviable position as what we saw last year. The blue line 2022, we had a much firmer basis at this time of year. But so far, the basis is considered normal or average here for early November. The crush incentive has had some ups and downs lately, but overall, it still remains profitable for processors. We did see in the month of September and first part of October, the crush values for soybean oil and meal come down somewhat, but we've seen a big rally in soybean meal lately, and that's pulled that crush value back up. We also saw just in the past few weeks a stronger appreciation for the price of soybeans, especially as Brazil started, their weather problems started to become more known, and we saw a stronger rally in the soybean price. So that higher soybean price narrowed the crush premium somewhat. as of last night, it was at $2.37 a bushel, which, as I say, is still a profitable enticement for soybean processors to keep crushing soybeans. And we've seen good crush numbers that have come through so far. One interesting thing in this situation is we're seeing the physical supplies of soybean oil stocks get especially tight. I believe they're down about 20% from a year ago in the latest report from NAS. But in spite of that tight supply, we have not seen much rally in the soybean oil price as of yet. Anyway, it's all been a big rally in meal where we're seeing very strong commercial demand for meals limited supply. So in my mind, there's some more room for improvement in the crush value in the months ahead as demand for both meal and bean oil have been very strong. This is the July soybean chart, and I put the July on there because since we're looking at a year in front of us that's going to have tight or limited supplies of soybeans, July is going to be the month I think that everybody keys on. And as you can see, just recently we encountered resistance at $14. We were trading roughly 20 cents lower today. Let's see if I can get a handle. July beans right now are down 16 at 13.74. So we're trading off of that resistance at $14 today. Of course, we're taking into account a slightly higher ending stocks estimate, but this continues to be a very tight situation. It's the lowest ending stocks being anticipated in 8 years, and I don't see any sign of breakdown in support yet. The one interesting thing to me about soybeans is if you look at the lower red bars, that indicates the non-commercial or speculative positions. And in the latest report, they were only net long 16,000 contracts, which is, in the scheme of things, is not a very big participation level. So in my mind, that just makes the strength in the price strength in the soybean market all that much more legitimate, and it doesn't have the bearish risk to it as, say, other situations where we have speculators heavily involved in the long side of the market. To me, it's impressive to see prices trading up here challenging $14 without much speculative involvement. That to me is the sign of a strong bullish market where supplies are legitimately tight. Let's go ahead and take a look at wheat now, what USDA said. We didn't expect the wheat ending stocks to show any change today, but they did come in lower. The little box at the bottom shows ending stocks estimate of 684 million bushels. That's up 14 million from last month's report, and the average farm price is reduced a dime down to $7.20 a bushel, which sounds like it would be a nice price now if you could get it, because prices have really been pressured lower in a difficult way. There was only 2 changes to note, and the production estimate stayed the same. We're still at 1.81 billion bushels on this year's wheat production. The import estimate was increased by 10 million bushels to 145, and the estimate of food demand was reduced by 4 million bushels. So 2 very small tinkerings, I would say, and we get a slightly higher ending wheat stocks estimate, 684 million bushels. That's still the second lowest total for the U.S. in 10 years. So historically speaking, these are still not what you would call a super bearish situation in terms of wheat supplies. The problem has been on the demand side. We just continue to struggle to find any export business. And I do have some hope that maybe that will be a little better this winter, but we'll have to see. As we look at the wheat classes, where did the 14 million bushel increase come from? Well, it came mostly from the soft red winter wheat category. That's the third arrow on the right. There you see the ending stocks of SRW wheat increase from 137 to 148. That's 11 million bushel increase. Next, hard red spring in the middle increased 5 million bushels, and the HR wheat category only increased 1 million bushels. So mostly this this month's higher ending stocks were from soft red winter wheat, which is the Chicago contract. Looking at the world estimates for wheat, let's look first in the upper right-hand corner and take a look at USDA's ending stocks total, just very slightly higher for wheat. Instead of 258.1 million metric tons, we're at 258.7 million metric tons. Again, a very slight increase. Excuse me one moment. The beginning stocks total, if you look to the left, was increased by 2 million metric tons. So there was some revision in a previous year that I haven't tracked down yet. But now let's look at the production column and go down, and we see that the crop estimate for Argentina was reduced 1.5 million metric tons down to 15. That's not a surprise. We've known about Argentina's dry weather problems. Australia has also contended with dry weather, but their estimate stayed unchanged at 24.5. Canada stayed unchanged. European Union was tweaked slightly higher, but take a look at Russia. Russia's wheat estimate increased from 85 to 90 million metric tons. Now, that was a question coming into this report because Russia's government just recently estimated a 93 million metric ton crop, and we've seen other private estimates in the upper 80s to low 90s range. So it seems quite reasonable for USDA to come in at least 90 million metric tons. I should also mention one, maybe a couple that are not on my table here. I can only have so much room, but also India's wheat crop estimate was reduced by almost 3 million metric tons down to 110.55 million metric tons. And the crop estimate for Kazakhstan was reduced by 1 million metric tons. So of the major producers that USDA has on the balance sheet here in the WASDE report, we can't totally see where the other reductions came from, but it looks like other smaller producers of wheat, other countries, probably also had some reductions to keep the ending stocks total basically unchanged after giving Russia a 5 million metric ton increase. The other thing I want to note on here, if you look at the bottom of the page to the right, you'll see that Ukraine's wheat export estimate was increased by 1 million metric tons up to 12 million metric tons. Now that's down from 17.1 million metric tons a year ago. And overall, as far as we can tell, Ukraine's been able to ship their wheat out better than they have corn compared to last month's paces, or last year's paces, I should say. So it's not unreasonable that USDA raised that wheat export estimate for Ukraine, even though they kept Ukraine's crop estimate unchanged. But that still continues to be a very difficult situation for Ukraine to get grain out of the country. If we look at the history here of world wheat ending stocks excluding China, we see this month's estimate came down to 124.8 million metric tons. That works out to 4.58 billion bushels. It's still the lowest in 15 years. But the difference, I would say, in this month's report compared to last month's is that this report now shows Russia with a 90 million metric ton crop, and I think is a more legitimate looking estimate in total. So to still see world ending wheat stocks at the low, estimated at the lowest in 15 years, where I think Russia now has a more legitimate estimate on the books here, I believe gives even further credence to the fact or the outlook that we do have very limited world wheat stocks in the world. The major problem keeping down prices has been Russia's big crops and their ability to price their wheat below market, so that they continue to have some of the lowest wheat prices around the world, and that's really keeping a lid on the international competition. It's a very tough situation for everybody involved, but we're really feeling the strain of it here among our U.S. producers. HRW wheat basis looks very weak, as we can see on this chart. This takes a look. The gray lines again are the past 10 years of basis levels. Here we are. Last night's HRW wheat index came in at $5.91. That's 64 cents under the December contract. Compared to the past 10 years, that's the second weakest basis we've seen for this time of year. And it's obviously a sign of poor demand that we're experiencing in the market, and in particular for HRW wheat. The export sales of HRW wheat are down, I think, about 38% on the year ago, whereas at least SRW and spring wheat have higher exports than they saw a year ago. But it's HRW that's really having a difficult time. If it wasn't for Mexico, we wouldn't hardly have any sales. Kansas City wheat prices here on the December contract had a big 22-cent jump yesterday, but we're down here a little bit today. On this chart, I typically use the 100-day average as an indication of the overall trend. That's the blue line. But I also added in this case the 20-day average just to show how long prices have been under the 20-day average. It's highly unusual to go 3.5 months where you don't get some type of rally, in this case out of Kansas City wheat, but it's been an unusually bearish stretch that we've seen here since the highs were made back in late July. And that's what we're still struggling with to break through here recently. Let me take a look at an update and see where we're at right now on December Kansas City wheat. I showed down 7.5 at 647 and a half. So the positive here is that wheat has gotten so cheap. Commercials are net long. That's the blue bars on the lower end of the chart. At some point, the non-commercials or the speculative crowd that is really quite heavily short in this market may have to cover here. And that's where we look for some sort of rally, but it's really been hard to come by, and especially with the export situation being what it is. In conclusion, looking back at today's report from the big picture, I think we have to say the numbers were bearish for corn. To see a record crop estimate come up on corn was a bit of a bearish surprise. To see the ending stocks increase to 2.156 billion bushels still is a bullish weight on prices, or a bearish weight on prices, excuse me. For soybeans, I'm calling it a neutral report. The ending stocks did go up a little bit, but they're still at a very tight level. The world supplies of soybeans were slightly reduced, but a bigger factor here is the weather concerns in Brazil, and we'll have to keep an eye on that moving forward. And frankly, I think the market's much more concerned about that than anything they saw in today's report. And then lastly, for wheat overall, I would say it was a neutral report. The U.S. ending stocks did see a slight increase, but we're still roughly at the same levels. We also have a world situation where wheat supplies outside of China are their lowest in 15 years. And that should count for something if we can ever get some demand generated. So with that, Andrew, I guess I'll mention the next WASDE report's December 8. We'll be back for that. But if you have any questions, this is a good time.
Todd, everything is good. We have no questions in the chat panel, so I think we're all set.
Fair enough.
Right. Well, with that, I'll just say thank you to everybody for joining. One quick reminder, this broadcast has been recorded and we'll have it up on dtn.com within the next 2 business days. And as always, Todd has listed his contact information if you'd like to grab that quickly to answer any additional questions you may have after the event itself. That said, it concludes our event, and I'll thank everyone for joining, and I hope everybody has a fantastic day.
Thanks, everyone.